I got very lucky. I literally was from a farm in Pennsylvania, and my father brought me into New York one day and said, "You should work in New York City." This is when I was in college, and I got very lucky in that during my last year at Penn State, I remember getting my I got a Series 7 while I was still in school, which is at the time you could do. Anyway, long story short, I was dumb enough to walk up and down Fifth Avenue, walk down Wall Street, literally walk in with copies of my resume, because I didn't even think we had anybody using email in '89. And you could walk into buildings and you could walk up with the floors. I mean, nobody checked you back then. The world was a different place. And I got put with a couple of pretty star managers at Merrill Lynch, one of whom now is the right-hand man to Steve Cohen, who does all the financial services stocks. But, you know, while I was at Merrill, I worked in different areas of the firm, eventually wound up running about a $500 million portfolio with all equities. And it was a combination fundamental technical style. Eventually ran a hedged product there that was all equities in the fundamental technical style. And my influences, I could say, came out of a few guys. It's kind of interesting. Merrill is not known to be a very technical shop, but back then it was. You had Bob Farrell, who was a legend, one of the founders of the MTA. But one of his proteges there, a guy my age, you know, so I'm about 45 years old, a guy by the name of Frank Texera, and he was very influential, got me to move to technical analysis. He now manages several $billion at Wellington Capital, and I definitely owe him a lot in terms of my thinking. But essentially, I boiled things down to looking at things in two ways. I use the William O'Neill analysis, which is more of a relative strength, EPS, growth rates, ranking, looking for volume percentage changes, and maybe looking at longer-term charts like weekly charts, things like that. And then I also look at things, and it's very difficult to combine the two when you're doing it. Eventually, I had to learn how to do this. But the second way I like to look at things is through Demark analysis. Tom Demark, also big influence in my thinking. Demark analysis, which I have on my screen, I have just a little 13-minute bar on the S&P futures you can see in front of you, it's almost like a formatted Elliott wave system where you're using ratios and movement. It's an automated fractal analysis program. There's a lot of different ways you can, a lot of different names you can give this type of analysis. Some people say it's a time-weighted oscillation system because most oscillation systems do not take time into account, while Demark does, and that's really the key reason I believe that I think it's a very accurate way of looking at it. Demark analysis can be found on Bloomberg, CQG, Market Studies. I don't know if it's anywhere else. But Rod Bentley and Tom Demark out of that cruise, they've obviously been very influential. Go back to a little bit of Demark analysis. Let's look at the emerging markets real quick. I was just talking to Fari. He goes, how's Hong Kong look on Demark? Well, you know, on a short-term basis, it might look okay, but on a long-term basis, I thought I'd just show you. I actually run Demark on a quarterly basis. which is, not many guys do that. When I get a quarterly sell signal or a buy signal, it's usually very important, and I'll show you some more towards the end of this webinar. But back in the beginning of 2010, we did get a 13 sell signal in the Hang Seng on a quarterly basis. All that means is that the probability for the trend to reverse and go the other way, meaning from up to down, is high. Now, it took a while because you are dealing with quarterly bars, but the probability of having significant secular move, secular bull phase from a 13, I think, is low. Well, guess what? This coincided with some other indices. This is the Indian Sensex. Okay. Now, your 13 came in here. Okay. And then you had you didn't quite get a perfected 9, but you still have your 13 reading. You were really close to getting a sell here. By the way, I remember I was marketing my fund. Well, I'm not allowed to actually talk about the fund, but anyway, I was in Europe marketing, and I had seen about 40 or 50 family offices in about a week, mostly in Geneva. And if I wasn't either an oil fund or an Indian fund, they didn't want to talk to me. One of the things to keep in mind is that institutions are, for the most part, as lemming-like as any retail investor. I kind of laugh when you have institutions kind of snicker and say, it's really retail. Let me tell you something. I've seen as many institutional guys be wrong as retail guys. The crowd, I think, is, doesn't, in crowd theory, I don't think it discriminates very much. Let me just do a couple other indexes real quick on the quarterly. And this is, of course, this is Korea. The daily looks awful. I mean, look at that. Well, it looks like the S&P. But, and then this is your quarterly. You have a sell signal on the quarterly for Korea. And then, let's look at Brazil. And Brazil's trying to recover a bit. Why don't we look at the quarterly signals here? And I guess my point is, by looking at the quarterlies, boy, that's pretty good. So probability of the trend continuing in a significant manner, remember, that's how you want to frame this, is low. And here, when you get the purple 13, which is a combo, that's usually the internal high, and then you'll get a secondary high. So this actually worked pretty well. My point here is that emerging markets had a very bullish bias. I mean, how many times did you hear everybody talking about China is a layup, China's going to go up forever? You've heard that, right? And that's at the point where these 13s occur. When the sentiment gets extreme and you get the signal, you could generally, overweight that signal or trust it, okay? Just going to mention a couple of things. First of all, for those of you who came in late, I'm representing Spotts on Trends. My name is Jeffrey Spotts, Chartered Market Technician. Although I do manage money, I have the advisory service. So I need to keep those separately, but I'm representing Spotts on Trends tonight. I may or may not have a position in any of the stocks that I had mentioned. Some of the things that we do at Spotts on Trends are live trade alerts. So we actually will shoot you something that we like. We have the rationale behind the trades, and we're working with some of the guys out of William O'Neill who work for Spotts on Trends who come up with these ideas.